Hey guys,
Gentlemen,
how you doing?
good to see you.
It's
Back for
is
another
this our
episode.
second recording this week?
It
Right?
is. It is.
Yeah.
Need to catch
We're
up
really-
after all these
Yeah.
conferences. Too much travel.
We're on a roll. Dylan, your favorite holiday is coming up.
Which one's that?
It's when you gave the middle finger to Peter's people.
Yeah. Well,
The UK.
I wasn't gonna rub that in.
Yeah.
But yeah. I love Peter's people. Just to be clear.
Yeah. I mean, yeah, you got a whole country out of it. Like, they just gave up.
I did.
Peter.
You didn't, Doug. Of course.
I didn't. Well, yeah, I don't like to claim it. I was talking to this British guy once, and he's like, "How do you feel about that?" He's like, "We lost so many of them. It's not that big of a deal." It's always like that. There's a meme about "I don't know about you at all." That's basically the vibe I got from him, where he's just like, "Don't worry about it, man." Peter, you should come over for a 4th of July celebration sometime, though. Dylan really does it up.
It's funny that I think nearly every country in the world has some kind of Independence Day that they celebrate. We've never known that, so we've never had that.
You started it.
You should just start setting up fireworks in the middle of London. I think it'd be great.
Well, you guys do. You guys have Fox Day, right?
They've got forks, yeah.
You set off fireworks. Yeah.
November the 5th.
Yeah.
Remember the 5th of November. Yeah.
Oh, 5th. Yeah, 5th. Sorry, I was off by one date. Nice. Guys, what's going on this weekend? Anything fun? Any InsurTech stuff that we need to know about?
Ooh, not InsurTech. Just trying to get my garden back in shape, considering we've been traveling all the time, and now I've got too many weeds. It's ridiculous.
Yeah, gonna get that seed round done.
The seed round's still been done months ago, but we're talking about in the garden, not financially. Oh well.
Okay. Yeah. Cool. Guys, well, let's talk about our guests a little bit. We got a couple of MGAs, brand new product coming on. I actually could use this product. Dylan, I don't know about you. How are housing prices going up in Richmond?
They are.
Steadily.
Through COVID from 2020 to probably 24, they were definitely flying up. Everyone was just so excited buying many houses. I know I bought multiple in that time period, and they were great investments. I will say right now it's a little bit more steady, but I mean, certainly the tax burden, the insurance burden, which is interesting. We should probably talk to them about that. I think they're mostly looking at valuation and the taxes that go along with that. But I'll tell you, my biggest increase in my bills related to a house have been it hasn't been electricity, hasn't been taxes, it's been insurance.
Oh, yeah, interesting.
Big premium increases.
What's the big? There's no big catastrophes in the Richmond area waiting to happen, but you're just feeling the increased cost pressure from everywhere else in the country.
I think so. I mean, the week that my daughter was born, we had an earthquake and the remnants of a hurricane, and then we lost power for 7 days starting around her 1 week birthday. And I was like, did I create the devil? What happened here? I don't know. How did this happen? How did we have multiple natural disasters? Because that's pretty rare here. Every now and then we get some tornado warnings, but it's really just it's pretty safe in this little nook right here.
Is it just general cost of services that's gone up that increases these prices? Because I don't know what it's like in the US, but in the UK, if you use a plumber or an electrician, any kind of repair on the house, the price has gone up so much more in the last 5 years. So I guess there's also that knock-on effect for the insurers, right?
Yeah, I mean, and also the goods itself. So if something damages your home, right, the actual lumber, of course, lumber prices went crazy for a while there, and there's a lot of different effects of lumber because it's something that you're growing. But let's use siding and shingles. Those have certainly have gone up over these last 5 years, and pretty much every component, every part is more expensive. Then the labor is more expensive. I mean, if the average repair goes up, you've got to increase premiums. It just makes sense. So I I know I've seen significant increases in my homeowners premiums. My rental premiums have gone up even more. It might be because of liability issues that go along with that. And then my auto premiums are certainly, I mean, they're probably close to double what they were 5 years ago. And I've had no accidents, no tickets. My wife hasn't either. So it's been amazing.
It's all that petrol you're burning.
Yeah. I barely drive. You keep getting on me about my truck. I love my truck, but I barely drive it.
I'll sit shotgun with you in that truck sometime, Dylan. We'll have a good ride around.
Got to watch the previous episode to hear about Doug's dream cars and other guests' dream cars, right? Mm-hmm.
That's right. Yeah, go Peter. Good callback. Yeah, check out the past episode. Learn about Dylan's big truck and all the petrol he burns, gas as we call it here in America. Big gas.
Of course, you would call a liquid a gas. Absolutely, yeah.
Nice. English burn. Peter, just to be clear,
let's get us back for the fourth.
Peter, after that conversation, I did happen to see that Mercedes AMG 1, and I don't know if you've seen the pictures from that yet, but that looks like it would be a good time too. So out of dream cars, that I might throw that on the list as well.
All right, guys. Well, let's get Bob and Diane on. Let's learn a little bit more about the MGA that they're building.
Sounds good.
That's great.
Cool. Hey, Diane. Hey, Bob. Thanks for joining us.
Welcome.
Good morning.
Hi, guys.
Morning.
How are you both? How are you both doing? Where are you all calling in from? I think, is it Florida? Is that right?
I'm in Florida.
Or Connecticut?
I'm up in
Bob,
Connecticut. So good memory, Doug.
Nice. Okay. Yeah. Well, yeah. I knew we were close. We'll definitely have to meet up at some point. So we were trying to explain your MGA product, and this is fun because I think you guys are building something that isn't out there yet that I know of, right? So it's not another your commercial auto, not a homeowners product, or it's not even like a niche product of like coverage. I think this is a new type of insurance coverage, and so rather than us like butchering it like we did in the intro, why don't you guys tell us specifically what the product is, like what you're working on? Because I think that's it's going to be a really big thing.
Sure.
Okay, I'll kick it off. We are offering location insurance, and this protects homeowners against the towns that they live in or their state getting worse. And by getting worse, we mean increasing current tax burden, increasing indebtedness, which is just future tax burden because the debt has to be amortized, increasing crime, and weakening schools. So those things are measured by a score, which is produced by a third party, a town score and a state score. It's a parametric policy. So if the score drops, the policy is triggered and it pays, and the policyholder has nothing to prove, and there's no actual claim. We notify the policy that the policy has been triggered and send a check for the coverage amount that the policyholder selects.
The town scores really are like credit scores for town, except they measure the things that matter most to homeowners, which is simply your taxes, crime, and schools, what you pay and what you get for quality of life in your community.
It's a very, very interesting concept. Yeah. So in terms of the limit, Diane, for these type of policies, you mentioned a point that piqued my interest there about the policyholder selecting a limit that makes sense to them. How do those thoughts, calculations come about?
So the change in score corresponds to the wallet impact that a homeowner in a given town or a given state will experience. So the score actually measures, it corresponds to a dollar value. So you can't buy a policy for more than the amount that you're going to be impacted. It is insurance and it does cover you. It's indemnifying you. So the score provider provides the calculation of what we like to call the wallet impact, and you can only buy coverage up to the wallet impact, but there is a limit of $30,000. It's possible your wallet impact could be bigger than that, but the insurance company wants to limit the policy size to a maximum of 30,000. And the way, I think importantly, the way the wallet impact is calculated, it's a perpetuity value of what you'll pay out over time because of something that happens today. So think of it like almost like a claims made policy. Like the event has to happen today, but you're going to feel that impact over time. And that's what the wallet impact is measuring. Again, a $2,000 tax increase today is really going to cost you $20,000 in present value over time.
Okay.
So-
And so
is the thought they can, oh, sorry, Dylan, go ahead.
no, it's okay. Yeah, I just wanted, so we were saying, hey, the present value is being calculated by this third party so that you don't have any control over it.
Yeah.
They're going to say what that present value is, or are they going to say what of the future damages from this, or are they just giving a today, your taxes and let's say your taxes are going to increase, $1,200. So are you doing that second calculation, or are they giving you the present values?
They give us the present value. That is the wallet impact. The wallet impact is the perpetuity value
Fully. Okay.
of what happens today. And it's for the average taxpayer in that town or in that state.
Okay, so if I buy a $30,000 policy, which is the maxed out limit that you have there, and they say that it's $12,000, you're going to notify me as a policyholder that claim has been triggered, and also pay out the $12,000, not the $30,000. Correct?
You know what the wallet impact is before you buy, and you're constrained to, for example, the $12,000.
Okay,
Right.
so that's in your system when they're purchasing it. They're going to be able to see that. Okay.
Yeah, the scores are correlated to a direct measurable dollar impact to the average homeowner wallet in a given town.
Yeah.
And that's illustrated for a customer before they purchase. And it allows them to choose the score drop that worries them most and the coverage amount that they would like to cover, from $5,000 to $30,000. And that's the entire policy.
Okay.
Yeah. And is this paid out like in a lump sum, or, so Diane, to your point, or the example you used of, the $2,000 tax increase that's going to be year over year, is it paid out today and I get to decide what I want to do with that? Or is it paid as, as those tax bills come due?
It's paid lump sum today.
Nice.
But interestingly, we are talking to people in the mortgage industry about they would buy the coverage and the benefit would basically get paid into an escrow account.
Right.
Yeah. Well, to say, like, that's how we pay our taxes are usually taken out with our mortgage payment. And so that's an interesting distribution hack. If you guys could
think about a particular scenario. If you have a fixed income homeowner who's owned their home for 40 years, and all of a sudden they get a $2,000 or $3,000 tax increase, which is happening in certain cities and towns across the United States, they're not going to use that money to pay their taxes. They're going to use that money to move.
Yeah. Okay.
Or to pay
their taxes.
I guess the point is, you guys can let them do whatever they want, right? They now have optionality. Yeah, they didn't have optionality before.
Sure, right. The money's fungible. I think an important thing to underscore is that the wallet impact and the score is calculated based upon tax burden and future tax burden.
Yeah.
It's not just taxes, it's taxes relative to income. So if your burden rises, it means that your local jurisdictions or your state jurisdictions, and by the way, jurisdictions, there are many jurisdictions that tax you, and the score reflects all of them: water district, fire district, school district, etc. If those jurisdictions are taking more out of the wallet of the average homeowner, then the score is going to fall.
Interesting.
Yeah.
So can I ask, have you considered partnering with some kind of an annuity partnership so that you could effectively provide the payment to an annuity company that would bundle this up, invest that money, and provide as payoff over years as well. Just thinking there's the potential to, like we do this with bodily injury and claims pretty regularly as well, right? Where we're saying, hey, we love the concept. You can get more if you do this, right? Because here's the limits of the policy. We can give you $1 million in cash, or we can create an annuity that's of greater value than the total amounts of the limits. Because just a lot of people don't. I love the concept of giving people the freedom to do what they want and just getting them cash. So I want to say flat out, period, love that, period, end of story. But, the potential to get even a higher payout with an annuity is an interesting concept as well. It's
that's really interesting to annuitize. Question, is $30,000 enough to be worth it?
Maybe.
To annuitize that? Maybe. I mean, it's a great idea. We're hoping that over time, based upon experience, that the policy limit could go up because, again, the wallet impact can be more significant than that $30,000 for many communities.
Sure.
So with a higher limit, I think the annuitization could be very interesting.
Yeah.
Sure.
It seems to me like a very timely product given the demands on cost of living crisis around the world and people very concerned with kind of moving pieces of their finances as they go forward. So number one, I think just from hearing about it, it seems amazing timing and a valuable product for a lot of people. I'm really interested in your origin story to this, Bob and Diane. So how did you come to start PlaceCovr? Where's your background been before?
Diane, do you want to lead on that, and then I'll jump in?
Sure. So it started with, in the financial crisis, I was an investment consultant for a publicly traded property casualty insurance company. And property casualty insurance companies are big holders of municipal bonds. They and high net worth, that's the market for municipal bonds. I'm probably exaggerating a little bit, but that's basically it. So 2008, the sky is falling. What is happening? Should we be worried that these bonds are not money good? So I started to look at the ratings. Obviously, the ratings were not super, were suffering their own reputational issues at the time. So I wanted to look at the issuing documents of the bond issuers and started to read a lot of public finance documents and discovered that they're super complex. Government accounting is way more complicated than regular GAAP, corporate GAAP, FASB. Number one. Number two, everything is basically off balance sheet because there are so many jurisdictions. They're each a separate legal entity, and each one of those jurisdictions has their own set of financials and has the right to tax you. You don't really know by looking at one issuer what that means for you as a taxpayer in a particular location. So those are the two things, and it just occurred to me at the time. Taxpayers, if they knew what was really going on, they might not be happy about where they live. If they really understood all of those liabilities out there that at the end of the day belong to them as the taxpayer, because that's who's going to end up amortizing these debts. So there was a little bit of an aha moment. Looked around to try to find the data to understand how to put the pieces together, and realize that it would be for any mortal person, it would be like next to impossible to do that. And then I'll let Bob take it from here.
So there we were having a discussion at a cocktail party where Diane and I discovered, anecdotally, that we grew up on the same beach on Cape Cod during the summers in our childhood, and somehow never knew each other. I mean, we were literally about 1/8 of a mile apart. And my wife and I had built a home in Connecticut after we left Rhode Island because the town in Rhode Island was having all of these issues, right? the high school was about to lose its accreditation. We had 3 boys. They had just sold. They were the first city in the country to sell off their wastewater treatment plant to private equity. And we were about to go through a revaluation that was going to double my property tax bill. And so we built a home in Connecticut and moved. Fast forward, here comes 2008. We're watching friends and family flee the Northeast because they saw smoke, but didn't have the wherewithal, the financial acumen, or access to the documentation to actually point at the fire. And they were moving to Florida. They were moving to the Carolinas, or, whatever. Families were disrupting school-age kids. Grandparents were leaving kids and grandkids behind. People were leaving good-paying jobs and getting out of here. And when I met Diane, my dad had some muni bonds in his portfolio, and I was trying to make heads or tails of them. And this is how we got onto the topic of you can't make heads or tails of the credit. And we sort of looked at each other and went, wait a minute, if location's everything, not one of you has ever met a realtor that hasn't said location, location, location at some point in your life. If that's everything, how come you can't insure it?
Yeah.
And what does location mean? Everybody thinks of location and they hear value. And in reality, what Diane and I know is location is the single biggest cost driver of home ownership. Everybody's focused over on the mortgage and the interest rates.
Mm-hmm.
Yeah.
The day you buy your house, your local taxes and fees and your state taxes and fees combined are larger than your mortgage. Your mortgage stays flat, and all the other things grow over time.
Yeah.
As I was bringing up before the show, or in the intro here, also insurance rates, of course, also increase that. And we were wondering. I think the answer is no, but that the cost of insurance, the risk associated with that house, is not included in your calculations, correct?
It is not. It is an obvious component to try to blend with what we're doing, and maybe down the road there's
Sure.
something there. But right now we're just focused on the jurisdictional aspects of your location value.
Absolutely.
There's probably a lot of areas you could expand into, a lot of adjacent risks as you see this popularize, and then that's built-in distribution as well. So it's a super interesting space, and I love the origin story. I love meeting people that are fixing their own problems, and they start something because of that. And then what Dylan was doing earlier, making suggestions for product as you guys go out and try to raise money. Investors often like to say, "Hey, have you thought about doing this?" And so he's really just priming you for that. Yeah,
I'm just working on my VC portfolio.
Dylan, I love it. Our roadmap is so big and broad, but we're really sitting right at launch. So it's a double-edged sword when you talk to a VC to describe this big, beautiful roadmap out in the future, when you have to be absolutely laser focused on that first step. And that's where we're at right now. We're just laser focused on that first step of building early distribution and getting early sales. And then, as Diane said, the mortgage industry is very, very interested in what we're doing. Big money center banks. We have actually one big money center bank that is, we're under NDA, and they're trialing the product to see if they can make it a mortgage adjacent product in their portfolio. We think there's a big opportunity in credit unions and community banks, because those banks actually hold their own risk and service their own mortgage portfolios, and they tend to be much more geocentric, and location insurance by definition is geocentric.
Yeah.
So there's a lot of different opportunities and distribution avenues that we can go through: employee benefits, financial planning, adjacent risk products. So it's really super exciting.
Yeah. Let's sorry, Peter. I was to say, because you guys are at the beginning of your journey, right? You're on day one here. And our hope is a lot of people that are listening, or the 2 or 3 that maybe now listen, they are thinking about building their own MGAs. And so I'd love maybe just to spend 5 minutes or so getting into the nitty-gritty of hey, this is what we had to do. These are the steps that we took. Right here are the number of people that we talked to. Here's how we're thinking about distribution. I mean, there's a lot there, but maybe like a quick timeline of, we thought about this idea, right? We met at this dinner party a couple of years ago, ideated it for a bit, went out and talked to a few reinsurers, and then how did it all come about? And what's the timeline there? I'd love to hear that part of it.
Okay, so the first thing we had to do after the ideation, and the ideation was everything from homeowners, and it's really they're the ones who can't diversify, right? They can't diversify at all, and they really have all their eggs in one basket. To anyone who also has a hard time diversifying against their location, like a large manufacturer that's put $1 billion into the ground someplace. And so that, of course, made us think about what are the capital markets play here. And, also there is no really opportunity in the bond market. That was sort of eliminated because muni bond holders can diversify and they can get rid of a lot of their risks. They can get rid of all the unsystematic risk. There's very little systematic risk. And for the people who want to hedge, for the institutions that want to hedge the risk, they can't go to the muni bond market and figure out a solution with that, because there's really no, borrowing against muni bonds kind of market. So that's where the idea. That's where the ideation was, and then it was really diving into the data and understanding the data and the jurisdictional overlap, and also understanding what are the key drivers here that need to be focused on. And where that ended up was how can a city or a sewer company or a state get in trouble? How do we identify it, and what can they do? So the score reflects all of the levers available to a town or a state. So if you get into a cash flow crunch, what are your options? You can raise taxes. Okay, the tax burden goes up. You can create new taxes. Tax burden goes up. You can charge fees that didn't exist before or raise them. It's really the tax and fee burden that is picked up. You can issue bonds to create cash. Debt burden goes up. That impacts the score. You can probably continue to or more aggressively underfund your pension fund to create cash. You can take the money, instead of putting it in the fund, you can pay the bills, the immediate bills. The score goes down because that's in the score. You can do the same thing with OPEB, which stands for other post-employment benefits, which is largely promised healthcare benefits to the government retirees. So those are the things that,
Well, you can cut
spending.
Yeah,
And
don't forget those.
The biggest areas of spending are going to be on safety, public safety. So crime is going to go up. And the other, and the biggie at the local level, obviously, is the schools. And if the school budget is cut, then you might see, a depression in the performance of those schools and the outcomes. So really, all of the ways that jurisdiction can respond is picked up in the score. And actually getting to that point was not it sounds simple, but you have to look.
It doesn't sound simple, Diane.
But it's not. Okay, but
maybe to you. Maybe to you.
That point was a lot of time waiting around and a lot of data and trying to come and to distill to that point. So that was huge. And then, what does the product look like? It's got to be simple. It's got to be transparent. It has to be auditable. It has to pass muster with respect to, does it provide indemnity? How do we know that the person has an insurable interest? Obviously, we didn't want to trip any wires into a different product space, as it were, or regulatory space. Mm-hmm. So there was the product creation. Throughout, of course, discussions with people in the industry to give us guidance. Bob will talk about our extremely distinguished advisory board, and distinguished, but people who have really earned So always talking to industry people, always talking to potential users, always talking to, of course,
Paper.
well, PCs, and of course, having lots of conversations with paper. And of course, it starts out with you talk to the fronting companies, and they're like, "Sure, we'll do it. You got to go get our insurance." Yeah, we'll do it, but we're not taking the risk. To the big companies, the household name companies that are intrigued, but it's not in their wheelhouse to try something that hasn't been tried before. So you have to find the sweet spot of the primary insurer that is flexible enough and entrepreneurial enough and sees a potential for potentially a new market. And we found that insurance company, and we're really pleased about it. Yeah.
So that's a lot of what.
Sorry, go on, Dylan. Yeah.
I was just going to say that's a lot about what we talk about here, which is the idea that MGAs are the test lab for so many of these products. So being some, I feel like fronting carriers in general are more open than the vast majority of other carriers to these really interesting ideas, and getting a product of one company doing something completely new. That's the hardest, right? To have something that's something similar to something someone else was doing, that's a lot easier, and making sure they have the actuarial data on it, again, a bit easier. I think yours, it does help a lot that you're completely data focused, right? So being able to have data and and see, hey, these are the trends that have occurred. This is what has happened. We can model this out. We can show you what type of losses you'll have based on this pricing. We can profit off of this. So I can imagine I know that it's always feels tricky when you're out there begging for capacity, right? But of all the products in the world, I think your product is one of those that where you can prove out what is at least happened historically. There's a huge amount of data on it.
Yes.
You just have access to it, show that, and be able to price accordingly to make a profitable product.
Yeah, that's exactly right. Yeah.
And so part of the challenge that we had, obviously, between the data, making the product really simple for a consumer and an agent to understand, and getting the paper, was let's go curate our earliest investors, our friends and family, really, really carefully. And, to be the highest value add type check writers that we could possibly find. So, as Diane alluded to earlier, because, we had to look deep into this data to get to the insurance solution. One of the first people to join our advisory board was Ewan Barnett, the founder of Carfax, because he took a big ball of data and turned it into something that everybody thinks is a consumer product, but it's actually a B2B product, right? Yeah. But it's it's perceived to be a consumer brand. And we went, aha, let's go talk to Ewan about his journey. And he's an amazing person to speak with.
Let me jump in here. So it's because there's really the path that we just described started with the data.
Right.
And now we have an insurance product, which is arm's length from the data.
Right.
To create the insurance product, we needed the data. So let's pivot and talk about the data, which is not the MGA. So we had to create the data first. And, we started with the usual suspects, Bloomberg, not helpful, not just because of quality, but because of incompleteness, but also the key really is the joining of the data back to the taxpayer. So again, all the data are generated are the entity. All the jurisdictions issue their financial statements, but they don't tie together. So you have to get those, and then you have to tie them back to the taxpayer to make it taxpayer centric. And just the way we like to think about it is that our customers at the end of the day are taxpayers. They are not bondholders.
Right.
And taxpayers and bondholders are almost like their counterparties. They do not have their interests aligned. When taxes go up, the bondholder is happy and the taxpayer is sad. I mean, it's just as simple as that. So we had to create the data company. We had to create the data. And now we have the data and we have a data company. And it is it's a separate legal entity. There is obviously there's overlap in ownership because of me and Bob. But we don't really want to be a data company. We want to create a protection product first for taxpayers. That's where we started. That's where we want to be. And now we find ourselves with having created a data company, which we think has tremendous value. And we need to think about, maybe finding a home for that data company with a company that's all they do is data, because that's different. It's really
there are a few of them out there.
There's a couple that may find this interesting, but
that's super valuable. The way you explained it, and again, I think I just scratched the surface, Diane, with you, thinking about some of this, but the way you're marrying those two sets, there must be real value there for others, right? Not just your MGA. So that's an interesting, I guess, byproduct of what you've all been working on.
Right.
Yeah, fascinating.
And as we move towards the insurance, to just round out the rest of the advisory story, we're very fortunate to get Paul Desenko. Paul was very early on American Pet and sat on Trupanion's board as a publicly traded company for 9 years. He's the former CEO of Converium, and he's mostly a turnaround specialist in the insurance world. He's run public and private insurance companies all over the globe, and for those people that are considering starting an MGA, like so many of us, having somebody around like that who's seen the bad helps you avoid some of the potholes. So, figuring out the path you want to be on is great, but avoiding the potholes along the way tends to be invaluable. And we're super excited in that Peter Hearn, who was stepping away as vice chair of Marsh and CEO of Guy Carp, joined our advisory board as well. We couldn't be more proud of that. And lastly was Phyllis Caldwell, who was at the Treasury Department and ran B of A's community bank and sits on a number of publicly traded company boards right now. Diane alluded to, mortgage adjacency with our product. Phyllis is there for a reason. So we have a very high profile, deeply experienced board in the lanes that we are in and the lanes we are headed to.
Yeah, really.
Those are amazing names to have on your board. Congratulations. I have a question.
Not bad for a couple of kids, that are flying by.
And let's not forget Warren.
That very, very good point. Our very first investor and our outside lead board director is a gentleman named Warren Hirschhorn. Warren ideated and built the valuation group at Duff & Phelps, which went on to become not only the beginning of that particular industry of portfolio valuation, but became the largest portfolio valuation group in the world. Warren sat on the board of Duff as vice chairman, both as it went on to the New York Stock Exchange and then came off and go private with absolutely gold-plated backers like Carlyle. And he's been there very early. And has been just a steady tiller hand on our board. So again, he slots right in there with everybody else. He's just been amazing, and we're very fortunate to have him.
That's great. So am I right in understanding the product is live today for Florida homeowners? Is that correct? Or?
So, okay, that's a good question.
Almost.
Okay,
yeah.
So,
maybe by the time this is live.
Yes. So you cannot. It's a surplus line product. You need to buy it for
my next question. Okay, great. Yeah.
So if you think about the website, it's really, let's call it policy execution. So you will have had a conversation with your agent, and who knows how that conversation goes, but it's going to end up with, I'm so sick, I can't believe I'm getting another tax bill, and I thought it was cheap to live in Florida, and now it's really expensive, and maybe I did the wrong thing, and I'm worried, and and we're hoping that the agent chimes in and says, well, you can protect yourself, and there is a product, and it's really simple. And let me explain it a little bit to you, but go to this website. There's all these FAQs on it. You can learn about it. If you have any more questions, call me back. Or if not, and you want to buy protection for yourself, here is my unique code. which you need to actually execute the policy. So we are making our second rounds with a handful of very large agency distributors in the state. And as soon as those contracts are signed, they will hopefully start selling the policies. So that is where we are literally at.
So can I jump in real quick? So I think this is a common question.
Okay, sorry, I was just going to say 1 second before that, because we should say the website. It's PlaceCovr.com without the E. So if you're an agent in Florida or you're looking at this cover, I went on it before this call, and I think the website is great, by the way. Super intuitive, super clear. So sorry, Dylan, over to you.
No problem. Yeah. And just to be clear, since there is an E in place, it's the E in cover that's not there.
The second E.
Yeah. That's a good clarification.
So place, the word place, COVR.com.
I think we're going to be explaining this a lot. I have a feeling, so.
It's okay.
We dropped the second E for savings.
It's okay. Well, everyone thinks I misspelled right here, typhon. Everyone thinks it's typhoon, and which is 1 O difference. So I get it all the time, and I fully understand.
Right.
But I still call your company Typhoon.
I appreciate that.
We had to be that hip and sure tech company that in the new MGA space. And
I get it.
Yeah.
Yeah. It. Let's replace 1 E with a 3 also. Just let's
like that.
Cool.
Yeah.
That was probably on the doodle pad a couple of years back.
These are more gold ideas from Dylan, the investor here.
You're welcome. You're welcome. You can use all of this.
Dylan, I've written them all down. Trust me.
All right. Am I going to get on this prestigious advisor board now with all these amazing ideas? Okay.
We sent your invitation out yesterday. Just check your mail.
I like this. Dylan's vying for a board position. Peter, I think you were angling for a bit of commission there with the name drop.
Absolutely. If you need any radio announcements, I'm here for that.
This is what the podcast is. The age of the MGA. It's also the age of the grift. I mean, there's at least 4.5 really good salespeople on this call right now.
We are waiting the number of name drops for products that we put into this thing, and we still haven't received anything. But we're building.
Wow.
We keep brought to you by Sony. I brought up a Mercedes AMG 1 a few minutes ago at the pre-recording.
You're not getting one of those through the post.
Hoping I'm getting a $1 million car here soon.
Well, your invitation's on the driver's seat. When it shows up in the driveway, just call.
Nice. That's a good way to get invited to the board. I feel bad for your board members you probably put this in front of them. They're like, "What guys? Let's pick up the pace of the quality shows that you guys are on. Let's go."
You can do way better than Age of MGA. Yeah. Anyway, so back to that quick question that I was going to ask earlier. You're talking about distribution. You're talking about surplus lines, and I think a lot of our 3 listeners, all like 2.5 of them, have the same question, which is, all right, so they understand surplus lines, as a concept, but they go. And this product that I want to make is probably surplus lines, but I'm on the fence because I'm scared because I don't know how I'm going to distribute this because, I've heard there's, we've got to have, X number of denials for this product, right? They've got to gone to the admitted market first and gotten that declination before they can get to sell their product. What is that? How do I get around that? What do I do in order to distribute my product? Is there anything you would tell them?
Yes. There's good news.
Let's go.
The good news is, well, for example, in Florida, they've dropped the requirement of 3 declinations. Okay. And that's the state that we're launching in.
As of July 1, just importantly.
In 3 days. It's gone. Before we launch, it's gone as an issue.
Our listeners definitely can open up an MGA and launch a product in 2.5 days. So Bob, I'm glad you pointed that out.
Okay. The second thing is you do need an agent. There needs to be a producing agent, someone who is holds the customer's hand to sell, which is great because that's your distribution.
Yeah.
So you want that distribution. The agent owns the customer relationship. The customer this product is addressing a real tangible fear and concern and anxiety that the customer has.
And loss.
And the thing too is, you know, the product premium is not humongous, right? It's between 1% and 7% of the coverage amount. So it could be, you know, as low as $100 or $200 for a policy, depending upon your coverage amount. But what I'll say in the industry is the attachment point, which is the score drop, right? The smaller the drop, the more likely it is to happen. That's a lower attachment point. That's
Sure.
going to cost more than a big score drop. But at the same time, the big score drop will have a bigger wallet impact. So,
and are they paying premium for yours on an annual basis for this? And is the score drop from the moment they've purchased till even if it's 3 policy periods later, if we're talking about 3 years later, how's that work?
That's a great question. Think about it like it's a claims made.
Mm-hmm.
That the score drop has to happen in the policy year.
Mm-hmm.
There are 4 opportunities for that score to drop over the policy year because the scores are refreshed 4 times.
Okay.
And it's kind of like a credit score where anything can happen that can change your score. As the information becomes available, it feeds into the score, and the refresh button is pressed, you know,
Quarterly.
or on a quarterly basis.
Yeah.
So, and there's a lot of information that goes into the score, and all that information comes out at various points during the year. So it's not like, you know, it can happen 4 times, but some of the information is annual, so it's only 1 time. But no, there's plenty of annual information, but it's distributed throughout the year. And then there's information that's more frequent than, for example, than annual. So you would get paid and you can renew your policy. You could buy a new policy at the end of the year, and we're positioned to let people know when their policy is expiring. And it's a one-time full policy. The policy limit you've selected, that's what you get paid. And I feel like I'm losing my train of thought a little bit. I forget.
Hang on. So Dylan, it's a 1-year policy. You can re-up it, but the score will have changed.
Yeah.
For the next year, and the policy terminates either at the anniversary or the payout.
Have you so because it's refreshing 4 times per year, and those, let's just say those are on set dates. If you consider what if people are purchasing, does it matter if they're purchasing right before or right after any of those quarterly times, right? If I was trying to game this, right? Am I going to get 4 no matter what? So if I do it the day after the refresh, am I going to still get 4 because I've got the 3 ahead of me?
Yes.
And then the 4th one?
You will always get 4. And
Okay.
What's more, if it turns out that your town that you bought coverage for, or your state, is there's a provision for being a late reporter. So if your town or your state has not released its financials in a timely fashion,
because they're a bum, which is the reason that you're having this problem in the first place.
Exactly. I mean, let me give you an example. Illinois has not released fiscal year 2023.
Wow.
Because they can't wait for the great surprise. They want to keep it to themselves.
Yeah, I mean, and California has had issues with reporting in a timely fashion. So we want to make sure that
also same thing. It's my understanding, right?
Sorry?
So crime statistics have the same issue, right? And and I'm sorry, is that something that could impact it as well? If values are going, well, I guess that's going the opposite way, right? Your values are going down in that situation if you're having high crime.
Yes, higher crime means score goes down.
Okay.
Yes.
All right.
Yes.
So with that higher crime, if they're not providing the statistics for that in a timely manner, then same thing. What happens to that if it comes? Are they still doing it, reporting for that single quarter or that single year? How's that work? Where you're still getting the coverage later, past your policy period end date.
Okay, so the way the late reporting works is it's for a jurisdiction that is releasing its financials. So the crime is coming from the FBI, which is released by the various agencies within the FBI that collect the data for their territories, and there is no late reporting provision for those.
Okay, so it's all related to the taxes or
the financials.
The financials.
The financials. Yeah.
Do you find, are there, most scores must be going down, right? I think just given the state of kind of where we are. But do you see areas that are like, hey, this is actually somewhere I want to go move because
where should we be moving? I guess that's the real question.
Okay, so that is a great question, and that's now I remember the thread of my train of thought was so the agent is our friend. The agent has a relationship with the customer. The customer is if they're interested in this product, they have anxieties about where they live. So we have a license agreement with the data company to allow the agents to give their customers a town score report, which can be found on townscorereport.com. They would get a coupon code that would allow them to download a report.
Is that the data company's town score report?
Townscorereport.com is the customer facing product and brand of the data company. And it's kind of like, it's like we like to say, it's the Carfax for your town. And that will help the client understand, where they're living and also, where they are thinking about going to. So that has value, we think, for the agent because it provides value to their customers. Therefore, it's valuable to them. It also puts town score report and town score and state score. It makes it more visible, and just hopefully advances the conversation about all these things and creates awareness, which will in turn create awareness for the insurance product.
But Doug, to your point, there are cities and towns that are taking steps that are accretive to a homeowner, so the score is going up.
Yeah. I mean,
with you guys shining a light on this, I think that helps. As I say, if I got a payout for my home, I think I would go to your website to be like, okay, I got to move now. Where am I going to go? I don't want to end up in the same situation again.
Yes, exactly. And the people who are buying the product are probably interested and would be very interested in the data product.
Yeah.
One thing I'd love to get into. So I noticed on your website, and correct me if I'm wrong in this logic, that you can choose one of the two base scores, right? You can choose your state score. You can choose a more granular kind of town score. What's your thoughts and feelings towards aggregation as you scale this? Because obviously, if you've got a lot of buyers in the same state, for example, is that a conversation you've had to really get into in detail with the capacity and how you're approaching it?
Yeah. They have aggregate limits on a town and aggregate limits on a state. And when we get close to those aggregate limits, we're going to celebrate because it means people are buying policies. And the good news is we have the ability to track what's going on in terms of how the scores are moving. And we have visibility, the carrier has visibility into that, so they can make their decisions. It's not really underwriting, it's really pricing and limits. It's limit management and pricing, and they can change tax.
It's a known tail, right? Like you said, it's claims made. So there's there's no risk after the policy period, and so they can adjust. And I know your all goal is to this isn't just a Florida product. This is something that you're going national with. But it's interesting thinking how carriers are deciding that for you as well.
Yes.
Right. And the national footprint sort of we're going to go from Florida to Connecticut, Rhode Island, Massachusetts, Pennsylvania, probably New Jersey after that, and then see where demand takes us and where distribution takes us, right?
Mm-hmm.
But that also goes back, Diane, to Dylan's question of a couple minutes ago about the declination issue. In Florida, we really don't have that. In the other states, to quote you and Barnett, you guys are an industry of one for the foreseeable future. There's no point in going out and looking because location insurance does not exist.
Yeah.
Mm-hmm.
And so it becomes a very easy, check the box. This doesn't exist, so this is the only place I can get it. And, we see, we like Florida because it's a high growth state. A lot of people are now experiencing higher taxes, certainly higher insurance rates. There was a tough year last year in insurance. So we think that market is prime. But where were people arriving to Florida from? Well, Connecticut, Mass, Rhode Island, New Jersey.
I would think that I would be, if people are fleeing a state, that's the perfect person. I'd almost want to get in with the sales agents of homeowners, right? That are, or at least the insurance agents that serve them.
Diane, do you want to riff on that?
Yeah, absolutely. So we think, just like when you talk to your listing agent about listing your house, they slip in a thing that says, why don't you buy a home warranty? It's only for the bronze, it's only not for the silver, it's only $1,000 or whatever. And this becomes part of what goes into the sales package, so that your prospective buyer will know that they don't have to worry about the appliances breaking, or if they do, they're covered. So this policy is assignable. So a home seller could buy the policy and then assign it to the buyer of the home.
However, let's not compare yourself to home warranties in any way from a claims perspective, because generally they're terrible. If you want to be really see something very interesting, look up the Better Business Bureau for the big dogs of the home warranty space, and you'll find that there are hundreds a day of complaints.
I'm sure.
And whereas you're trying to make a product that is very simple, and that's when you're going the parametric route, you're saying, hey, here's a singular piece of data that says we're going to issue a payment. We are going to let you know that payment is available to you, and then we're going to issue payment. I think there was one little caveat on your website saying, of course, you still have to own the home. And so I'm assuming there's some level of home check before you actually send the check to their home. But
they have to sign a document saying
you have to attest.
So
they still own it.
So you're telling them that they're eligible now to receive a payout. They need to attest to the fact that they own the home, and then a payment is issued. That's it, correct?
That's it. That is it. But
that's how insurance is supposed to work.
It should. It's beautiful, and I want to point that out because that is not the home warranty person. I know that's you were talking about distribution, not the claim side, but that's a really tough space to be in, and to be able to sell something that comes with that level of simplicity for the claims handling is beautiful, because as a consumer, I want the most simple path, right? I don't want to have this long claims process. I want it to be short. I want it to be simple. And if I could be told that I've had a claim before I know I've had a claim, that sounds even better.
Right.
This was designed to be so simple and ergonomic. Like Peter said, he's been to the website and really liked it. It's simple. I mean, it binds in just a couple of questions. With payment, you get your deck page and policy, right? You can always go back into you don't even have to download it. It creates an account for you, and you can go back and visit it there, or you can download it and put it in your file. And you get notified when when your policy is triggered and you have a loss, and you get this very simple, do you still own your home attest, and is this your mailing address for the check? Yes, check the box, and you get a full coverage payout. To me and to Diane, this was always how insurance was actually supposed to work.
There's a lot to love about this product, but as I say, that the thing I love the most is out of the states you all listed, Virginia wasn't on there, and so that means I can have something that Dylan doesn't have for a while, which I'm really excited about.
You're just gonna hurt me like that, Doug?
All right, man.
Yeah, but Doug, he's gonna be on our board and be driving a Mercedes.
Peter's getting a bunch of commission. Dylan's got a board seat. I got a nice dig in. That's all I really want. That's what I live on. I would love, I know we're kind of, you guys have been very super generous with your time. I want to talk a little bit about the tech, if you don't mind, because I love kind of getting into that part of it. And there's so many ways to get to the bottom of that for an MGA. day. How did you guys kind of like build some of the tech, source the tech, the data model we talked about? That's super proprietary. That's interesting. I think that's kind of, I think of that as your secret sauce. But the policy admin system, different systems you guys are working with. How did you guys think about architecting that, putting all the pieces together? Did you do it internally? Did you get outside help to kind of come in and help you think about all those pieces?
Okay, this is a really easy answer. We have an outside developer. I don't think they would call themselves a tech firm. I think they would call themselves a web developing firm that is more of a marketing firm. And what we're really selling is not complex. And I always, when we talk to different firms, you say in the word insurance and it causes their brains to explode and they think about how complicated it's going to be. And we had to actually get away from developers who worked in insurance because they couldn't do it. They were trying to complexify. And instead we said, this is really no different from buying a belt buckle on the internet. Yep. You're picking the color, the size, and you're telling us where to send it. And either we have it in your state or your town or we don't. And that's it. Yep. And so as long as we had a way to look up scores, and a way to, and everything else is like buying a belt buckle. You have an account that shows you your past purchases of your belt buckle, or it shows you the picture of your belt buckle, and there's the document. And it's really, that's the technology. It's really not more complicated than that.
Doug, we did speak to outside providers and firms in the insurance space, like Diane said, and TPAs and all this stuff, platforms, and the product doesn't fit on any of those because we thought about insurance differently. We thought about insurance from a consumer first standpoint, the homeowner first standpoint. And it's so simple with so few moving parts that all the stuff that's been designed heretofore and all the little things that people are working on out in the insurtech space, we don't fit on those platforms easily or well. And frankly, most of them we don't need.
Yeah. That's, I think, the desire to overcomplicate things. So you can say, this is mine, right? I did this and it's so special, but that the way you guys are doing it is absolutely right. So I love that. Like knowing what your value is, saying, I don't need to overcomplicate the rest of it. There's big lessons in there for, I think, other people building for this space. So
absolutely.
Glad you guys were willing to talk about that.
Yeah, it's interesting to hear because I think obviously we didn't know each other before, but I think both Tourist and Laura's tech in the way you describe it is very similar to that. We came from a vision that insurance is complicated as an industry, but perhaps it gets overcomplicated, and particularly for people first launching something, the most important thing is getting to market fast, testing something, not building this behemoth of a tech infrastructure system behind you that takes years and years to get off the ground. So I think that's a good philosophy to have.
Yeah.
It's served us well so far, and we're looking forward to launching here in a very short amount of time. And again, we think it's very simple. It's purpose built for the customer and for agent distribution, and we've tried to get as many of those thoughts into a simple model as we could.
Yeah. I think as we scale, it's obviously the tech needs are going to expand as we onboard more agents and agencies. It will expand. But for now, it's let's figure out what we need. It's all very manageable. Anything that's not automated is easily managed until it's not. And then so
it's classic crawl, walk, run. Which is why we're going to launch in one state and crawl, and when we hit the pain points, that's when we'll go look for solutions that we need.
Yeah, absolutely.
So you're saying it's so easy that Doug could purchase it online without a problem?
Well, you almost went to the caveman thing, Dylan.
I want to separate it. It was an ode to Geico. Great job.
Yeah, get a letter from Geico here. Yeah.
That is one of the greatest ad campaigns of all time.
It's very
Yeah,
good.
well,
You know
That
what?
is
Doug can act as your caveman for your commercials.
Let's say this is true, but I still will have Salvucci purchase it for me because I want to have the
Another-
earnest
another-
commission.
Another
Shout out
great guy, by
to
the
John
way.
Salvucci at Fort Side, who's fantastic.
Yeah, Fort
too.
Side.
He's,
Of course,
he's, he's great.
He's my broker.
Let me before Peter asks his kind of ending question here. I want to show you guys because we brought up
Oh, boy.
Salvucci here. So let me find this
Here we go.
picture.
Definitely for the YouTube watchers of our show here. Yeah.
This is for the YouTube. Yeah, this is why you should be watching us on YouTube. So here's here's
look at
Dylan and John Salvucci up there. Right. So that's my insurance agent on top there, and that's my data claim from Thunder down at the bottom there. And so this was when we were all running the MGA together, and to save money, we didn't bunk up. Peter, you guys do that. Peter's like,
That's
you guys
disappointing.
aren't doing it right.
I'd say you're not a true startup if you don't share a room initially. Come on.
But yeah, we would hold meetings in these bunk rooms, and yeah, it was a good time.
Look at the luxury of the pod as well. 2 TV
looks nice,
screens.
By the way,
Yeah,
I do
right?
not fit in that bed. I'm going to tell you, my feet have to go between those different rails.
Right.
See where the TV is?
Yeah.
Yeah. My legs go on either side of those rails, and my head is touching the metal.
Hey,
So-
hey, Dylan, I'm going to challenge Peter on the terms luxury and pod that close together in a sentence.
True.
Yeah, I agree.
Fair challenge.
What was I say? So Diane and Bob, if you guys want our code to get pod room, you can have it. You guys can bunk up like that.
In the
I think George and Kelly would have words with us. But yeah.
So the spouse. Well, you know what? Take the spouses with, and then you guys can,
Oh, yeah.
keep the spouses with you in the room there, and then you still feel like you're saving a lot of money, and then you can hold meetings in here during the day. Every founder should be doing this. So this is if you're watching this as an MGA founder about ready to get going, this is what you have to look forward to here.
And eventually, Doug's going to turn the present button off, and I can stop looking at my legs.
That's just me. What do we got here? There we go.
There we go.
Smooth.
Yeah, a lot of technical expertise on this side of the podcast here.
Goodness.
Well,
All right.
Dylan's legs just sold us on the board seat. So,
Absolutely. So look, we love to end, guys, and thanks again for coming on. Really interesting. Congrats on everything you've achieved to date. Maybe hear more in 6 months, 12 months of how the story's going and all these states you're expanding into.
we would love to give you the update.
Yeah, we love to end the show with asking, this is a whole new venture, but what you see as your legacy in the insurtech insurance space, what you hope to achieve from all of this. So that goes to both of you.
Well, I think to have started a new product category that helps taxpayers and homeowners, and to raise our child, which is this company, until the child is able to survive without me. I'm not going to speak for Bob, but not super different from having children. You want to raise them and grow them, and then launch them, and then watch from a distance, watch from arm's length. I think that's what I'd like out of this.
I agree. I mean, look, we have a category defining product. Pet insurance 20 some odd years ago was an idea. It didn't exist, and now it's ubiquitous. We see the same glide path for this because insurers will begin to white label this. It'll be an endorsement eventually. It'll be on your employee benefits page, and that's our legacy. We want to have invented location insurance to help preserve and protect the lives that homeowners have built, being part of the fabric of their community. Mm-hmm. It really does make communities and homeowners both more resilient together.
Love it.
I love that. Yeah. Very cool. Hey, well, thank you both so much for your time. I really appreciate it. It's been great. I think we only met maybe a month and a half ago or so, and had the opportunity to hang out with you both last week in person, which was fun. So yeah, hopefully we'll be seeing you around at other events, and definitely excited to continue to watch the journey that you guys are on.
Thanks for having us. It's fun.
Love it. This has been great, guys. It really has.
All right.
Thank you so much for the opportunity.
Thank you.
Yeah.
Pleasure.
Bye-bye,
Yeah,
guys.
thanks so
Bye-bye.
much for coming on.
Bye.
Very cool, guys.
Fantastic.
Yeah, that's a really interesting product. I told them when they pitched it to me the first time, I would buy this in an instant. It makes a lot of sense. So they're gonna do big things.
Very cool. Yeah, it's nice to have something that's truly unique and new here. I think we've had a couple of times now already in our short tenure here as the HMGA podcast host, seeing what's out there and seeing something that's where you go, hey, I haven't heard of this, or the way that you're doing this is truly new and unique. And I think that's our greatest privilege. Honestly, if I had to answer your question, Peter, about legacy, I think that is actually one of the really most interesting things to that opportunity to speak with everyone here and then share that information with everyone in the industry. That information of, hey, here's how to think about something from a totally different perspective. That I think is a lot of the legacy that I'd like to bring from the show.
Yeah.
So Doug, what are we thinking for the thumbnail? Are we thinking just like a picture of just my legs cut away the body?
Maybe.
Just leave,
I was,
leave the legs
I'm a little worried now about the potential holy hell I've unleashed, because I was thinking you probably have a lot more photos of me that I don't want out there than I have of you. So,
sir, I do. I want to let you know that is true.
Yeah,
it's right here. It's on Do Not Disturb for the show, but there's ammo here.
All right. Yeah, I got to start thinking about consequences. All right, guys, it's Friday. We're gonna maybe tuck into something fun for the weekend. I have just a lot of meetings this afternoon. All great people. All looking forward to them. But man, I could use so I took my co-founder out last night, who's German. The hotel I'm at is right across from a German.
Everyone who listens to the show knows who Sven is. Come on.
Oh, that's true. Well, Sven was our one forced listener for a while. Yeah. I think we talked about hijacking him in a car and making him listen to an episode. But I took him to a German beer hall last night, and it was fun watching him tell me how American all of the stuff was. But he's a good sport for letting me take him out. Cool, guys. Have a good weekend. We got a couple more. Wait, I think we have one more before the 4th that we're recording. We actually have some. I'm really excited about some of the guests we're getting lined up for July here. We won't spill the secrets. We
have a lot of high profile guests coming on, don't we, across different aspects of it. Never been a better time to listen to the Age of the MGA, should we say.
Start listening, catch up with all the past episodes, take notes, send those notes to us, tell us the positive things that you like about us, the negative things keep to yourself. Exactly. That's how feedback works, right, Dylan?
I want all the negative things only, and
send Dylan
specifically. Yeah. Again, as ammo mostly.
Oh, you're gonna be really busy, Dylan, if that's all you're taking in. All right,
guys. Have a great weekend.
Weekend.
See everyone soon.
Bye. Chat later, guys. Bye-bye.